Hey traders, checking in on the stock market today. We got the gap down open, we got a morning bounce, we got hourly lower highs, we've got a downtrend to be keeping an eye on as some growth names are starting to try and tilt the scales a wee bit. We'll check in on everything right now. So we do have a solid amount of bullish reversal candles with high volume forming today, but we know bulls still have to prove it to us on hourly time frames. Some names in the growth sector, which we're going to look at, are more developed with their hourly trend change attempts than others that drop to lower lows middle of the day. We'll look at that comparison. But we had some nice bounces on the morning with the gap down open. I talked about the gap down potential open yesterday in the video and talking about looking for the biotech sector to bounce. And I was actually not aggressive at the open, at least in the first 15 minutes, because it wasn't a big enough gap down for me. And again, I'm being real picky in this market environment, and that's perfectly fine. I would much rather miss a bounce than try and play counter trend and keep giving back small amounts of money. But we had a SPY gap down, and actually what I did was I played short first thing. And I looked at QQQ and I was watching the 1 minute time frame, as I'm doing more often these days with the amount of volatility we're seeing, specifically in the morning. And as soon as I saw this 1 minute candle roll over on the 3rd minute of the trading day, I was short on this candle. And then I did stop out, essentially break even, once we saw the big bull move follow through. Another example of stair-step patterns. Bears have had it easy on stair-step patterns, where every single candle is a higher low. Look at the 1 minute time frame here. Stair-step short, plenty of space to have a winning trade there. Another 1 minute stair-step short. And again, just enough to at least get risk-free, and then maybe you stop out. But we had some bounce follow through. Essentially, the way my morning played out was short QQQ, stop out, break even. And then I noticed, I said, okay, biotech sector is standing out as a lead bull, way stronger than everything else. And I know I'm watching for it to bounce because of how very beat up we are on a lot of time frames. And so I saw this big move and I didn't get any of it. And again, it's a big move because the ETF goes 5%. The leveraged ETF in 25 minutes went 15%. So huge amount of volatility. Missed it. So I stopped out break even of my short attempt. And then I said, all right, well, that's a big enough bounce where I'm going to scout a 5 minute higher low. And I was watching QQQ at the same time. And QQQ was not nearly as strong, but it had space for the 5 minute higher low to form. That's the wrong day. Had space for the 5 minute higher low to form compared to the low of the day. So I'm keeping an eye on that. I know that XBI has way more space for the 5 minute higher low. I was watching EMA 12 support as a bit of a visual guide. Look at the volume. We know that increasing bull volume, if you've been watching these videos, you've heard me say this in the past, increasing bull volume with the higher volume candles, not the first candle of the day, stands out to us. And that shows us notable volume. And so that bull volume in comparison with that bear volume on consolidation definitely had me interested. So made an entry, exit partial, exit half of LABU, and then just let it ride. And then I recognized, okay, it looks like we have a 2 minute rising wedge forming on XBI. And I'm going to be all out this position knowing that, we have so many trends to change. We got to change the hourly trend. So I knew I would be out of this position on this potential rising wedge. And so this little 2 minute lower high here, I exited the rest of my LABU and I actually entered LABD. Sold half LABD, stopped out LABD, break even. But it was a decent start to the morning. All in all, my swing trades were red, which I'll talk about because energy sector that I swung started the morning great, but closed green. And I exited my dollar short, which we'll talk about in just a moment. But day trading went well and had a, what was it at the end? Maybe a 2-day maker offsetting an additional day loser on those swing positions. So what do we need from here? SPY, we've got an hourly downtrend. Again, keep it simple because we've been in an hourly downtrend every single day this week, including last Friday. So 5 days in a row now. And that helped bears this morning. Look at the hourly lower high from yesterday, 398.16. We failed to break that level. Still pretty far away from it, so not an ideal level for a top fish, but QQQ gave us a great top fish. So hourly lower high set, lower low into the end of the day. Again, a high volume notable bounce into the end of the day, which is what gave us that long lower wick. And again, it's a bullish reversal candle after a gap down. I'm definitely paying attention. but we have to confirm an hourly trend change during regular trading hours to believe that there's a short-term shift. Keeping in mind, we will just be looking for a daily lower high to be the result of that bounce. Once that bounce gets going, we'll talk about that more, but we're going to be monitoring the retracement size of the bounce, determine probabilities, but we're not even going to worry about that or talk about that until we see an hourly trend change shape up and that daily bounce get underway. So QQQ, look at this move up and look at the hourly resistance. So hourly resistance from yesterday at the end of the day, 296.54. High of this day, 295.75, less than $1 away. That's an ideal top fish. And so bears then took over from there. Pretty much a double bottom at the low of the day. It was a bear break, but no follow through. And then a bounce into the end of the day, but again, it's still an hourly downtrend. So hourly downtrend at this point, lower high every single day for the last 6 days. Still not daily oversold, but a solid bounce on the gap down, an hourly lower high for bears. There's a lot of these days out here where we're getting nice opportunity for both sides. Bulls in the morning, bears late morning into midday. We're often seeing lots of reversals taking place or shifts in momentum when the European markets close at 11:30 a.m. Eastern. And Mr. F has been noting that in the chat room. But keep an eye out for 11:30 just to see if there's a shift in momentum, because it's happened a bunch of times, at least this week, where that's where we get some reversals taking place. And again, it's not exactly at 11:30, but between 11 and 12, it has happened fairly often. So hourly trend change is needed. SMH, still watching this falling wedge, still not interested in it, but I'm going to be paying attention. If we get a daily bounce going, I'll be looking for a lower high and watching to see if this tightens up for an eventual break late May. But at this point, the bull's just trying to bounce. The hourly dropping to the lower low. So every name that we've looked at, aside from QQQ, you could say double bottom there, but lower low. As I talked about in the video yesterday, if you're trying to change the trend, every time you hit that lower low, it's back to square one. It's like you put in work to try and shape up the hourly trend change, lower low, erase it. Have to start from scratch. So SMH isn't in a clear hourly downtrend. And if we don't break the high of yesterday, it's just an hourly lower high. As far as the futures charts, let's see if they're showing us anything different. I don't believe they are. I think the clarity for me is on the hourly here. Yeah. So I'm just going to stick with the hourly on SPY and QQQ. Apple has been a lead bear ever since we rolled over and broke our key support. And so that has been a weight on QQQ, heading towards daily oversold conditions. And again, we've been bouncing from this daily RSI range all of the last year and a half, even longer. We've bounced from right at daily oversold over the last 2 years. No, 3 years. But it can always be different. We know that much, but 3 years, pretty decent. Hourly, drop to a lower low, back to square one. Clear hourly downtrend is our guide. Healthcare. So healthcare, solid green candle. Lower high set at 129.09 yesterday. So that's going to be a resistance level we're keeping an eye on. And you can see the bears are slowing down a little bit as far as healthcare is concerned. The bear breaks are lacking follow through. So we break support by 23 cents, and then we hold support by 18 cents, and then we break support by 60 cents. And with that, I know that I could draw a falling wedge, because falling wedges, by definition, are bear breaks without follow through. Let's turn off extended hours just to make it a little bit more crisp and clean. That is a falling wedge. So semiconductors have one. XLV has one to be keeping an eye on. Different time frames. This is the hourly versus the daily for semiconductors, but worth keeping an eye on for XLV. And then we'll be watching for a weekly lower high to be the result of the next weekly bounce, but one time frame at a time. Financial sector, bullish reversal candle. Again, the volume is standing out to me. I'm definitely watching high volume on the week as well. And not necessarily XLF. There's a bunch of names that have a really high volume week, but the fact that it's the highest volume day in 6 weeks or so, maybe 5 weeks, keep an eye on that. So hourly, nice bounce into the end of the day. Big time volume, but starting from scratch. So anything under the high of today is just an hourly lower high. So hourly downtrend is needed to change into an uptrend. IWM, hourly, held a higher low. So growth is a bit different. And we're going to look at that in just a second. But low of the day, lower high on the hourly, held support, tightening range. Burden still on bulls, have to prove the hourly trend change, have to break the pattern of a lower high every day for 6 days. But watching for that daily bounce attempt tomorrow, keeping in mind people have not been wanting to hold over the weekend recently. Fridays have definitely been fairly weak. But the biotech sector, with that really strong morning move, we've got a lot of space for the hourly higher low, and it formed. So it is more developed. It's a more developed trend change attempt than the vast majority of everything we just looked at. Low of the day, high of the day, higher low. If we break the high of today, it's a very clear and convincing hourly trend change to the bulls. And with that, it's the biotech sector, it's ARKK, has one shaping up. It is cannabis, CGC, in Canadian MJ. It's not at 522 after hours. It's in the 530s. So growth is shaping up hourly trend change attempts. Shop has more work to do, but hourly higher low. So growth standing out a little bit stronger, which is not common. And I actually got a little bit excited for how the morning started because I shorted XLE yesterday and XLE was real weak on the morning and I was in XBI, which was bouncing. So I was short energy and long growth through the biotech sector, and it was beautiful in terms of doing exactly what I wanted it to do. But it was short-lived. And the energy sector correlation can change based on support and resistance. So what do I mean by that? I mean, we had a very clear bear correlation to start the morning in the first 30 minutes. 5-minute bear flag, dropped down into clear bear, followed through from yesterday's candle. So let's just look at it with our ratio charts. We're XLE divided by SPY. Are we stronger or weaker than SPY? Weaker all morning. Well, I guess not all morning, a half hour, 35 minutes. What changes? So what changes, in my opinion, is we defend daily support on XLE. This is the level that would validate I am correct about my trade. Breaking this daily support of 75.13 to confirm the daily downtrend, which is what the premise of this entire trade is. And so as soon as that support holds, the correlation shifted. And we went from a bear correlation, bulls buy support, and it shifts to a bull correlation because of that buying pressure. And so now I'm sticking with my trade as far as letting it play out because it would be possible to fail to break 80.33 and then roll over. But it's definitely a cautionary red flag for me. If this trade were going to be a real good one and convincing, we would have broken support here today and confirmed the daily downtrend, but we did not. So going to keep holding this trade and give it one more chance. I guess as many more days until I stop out. But the shift in the correlation, make note of that. It happens, these correlations shift. If you're a day trader, they shift multiple times throughout the day. And you can see it happening if you get really accustomed to just staring at the bid and the ask and watching how they respond. You know, how fast is XLE ticking down as SPY ticks down? And if you're not staring at the quotes and watching it that way, then you're looking at those ratio charts that I just showed you. But XLE holding on for these bulls. The dollar. So this was the 4-hour rising wedge I was keeping an eye on. And fortunately didn't get a chance to add any position. I talked yesterday about how it was a UUP is a very low volatility instrument. And so I was open to adding size or doubling up position size at resistance, but we opened the morning breaking out above this level. So essentially ditched my UUP short, kept my XLE short because it was working. It's now working a lot less, but that is where I stand as far as swing positions, which I haven't had in a while. I've definitely been focusing on day trading, and this is probably my best day trading week in the last few weeks. And the biotech sector is a big reason for that. Just trading it in both directions because of the volatility that it's been giving us. But DXY here, so oftentimes we will see a throw over where a rising wedge breaks bull, and that marks a top, but I'm not going to keep trying to short this very strong name. There's tons of space for a 4-hour higher low to form on any consolidation here. And just a strong daily uptrend still intact. So failed that one. Miners are absolutely crushed. GDX RSI down at 23s. This is the most beat up the miners have been since the CVID dump. And then before that, it was the 2018. So miners are just, it's painful, but painful for those fundamental metalheads. But look at this triple bottom. So if we were to dump another red day down towards this triple bottom in daily RSI levels, that beat up, there's definitely a bottom fish play there. Hourly. Little bounce at the end of the day. Tons of space for an hourly lower high. What's gold doing? Didn't look at gold much today. My keyboard is lagging. Come on, keyboard. Yeah. Just continuation for the Bears. Man, imagine how frustrating. This is why I don't like fundamentals. How many people are right now in very underwater gold, silver, and miners positions because of inflation? A lot is the answer. But price action matters so much more, in my opinion, to validate or deny fundamental theses. Oil, so what I need to see happen if my XLE short is going to play out, I need to see an hourly rising wedge here break bear to set a daily lower high. So anything under 111.37 is a daily lower high. XLE gave us that daily lower high yesterday. Oil has not done so. And so I definitely need help from oil bears if that XLE short is going to play out. And one reason I was really excited this morning as far as is this happening would have been if energy started selling off while growth was going up, it would have been very notable to me as some rotation. And we have not seen that kind of rotation in a long time. But again, very short-lived, just 35 minutes that was going on. Natural gas, need that daily lower high as well. Has not been set yet. Consolidated 4-hour support is now 718s. And need to lose the 4-hour higher lows for a daily lower high to be set. So the energy sector gave us the daily lower high. The energy commodities have not done so yet. And they have to if there's still a chance for that bear break on XLE. All right. One more trading day in the week. Gonna give the bulls a chance. Again today, look, especially these growth names, man, they've got so much volume. Look at ARC, daily volume, highest in many, many, many months. Bullish reversal candle, weekly volume, easily the highest. Look at the biotech sector, weekly volume, only 80% done the week. And it is just blowing everything out of the water in terms of previous volume. 3 days of massive volume here. And there's definitely some buying going on. Just not enough to get the daily bounce going. So I will definitely be watching the biotech sector with a little bit of a bull lean for that daily bounce to get going. And just trying to position forward in risk-free scenarios. Tomorrow's a pretty important day. We're either going to end on a low note or we're going to end into next week with a little bit of hope for a daily bounce. But again, just going to scout daily lower highs. So we need multiple green days in a row when these scales tilt. If it's a bear flag, obviously, another leg down is very likely. But we need multiple green days in a row if we're going to see a big enough bounce to try and set up a trend change for the bulls on the daily. But one at a time, got to start with the hourly. And bears, I wouldn't say bears considered today a win. I guess they would with Apple control. Bears are pleased with how they're controlling Apple the last 2 days. But Netflix, interesting, Netflix is the only, I don't even know what to call Netflix these days. Is it going to be a growth name? Because it's doing what the growth names are doing on the hourly, and it's not doing what any tech names are doing on the hourly. So keeping an eye on that aspect. But I'm just looking at my screen right now and seeing, how did we end? What did the sectors do? And to me, it just looks like bears are tiring a little bit. They've had complete control for 5 days in a row now. And decent enough amount of green out there that it looks like bears are tiring a bit. But we'll see. We'll see how we open tomorrow. Let's just go to futures one more time to do a little scenario. How could overnight play out if we pull back? Again, it's just the hourly downtrend is so clear. If we gap down, I'm going to look for a bounce. If we open higher, I'm going to look for a top fish. I mean, that's really what it's been boiling down to, at least the past couple days. Do good things. Appreciate you watching. I haven't been filming anything in the yard, so I'm just recycling clips here at the end. But I'll film some stuff over the weekend. The rhododendrons are popping off. We're definitely due for some geese babies very soon. And the new bees are getting accustomed to the yard. Bye.